Hi everyone and welcome to today's morning report analysis videos on Thursday 1st of March with me, Richard Perry, market analyst at Hantec Markets. We've got dollar strength that's coming through the markets now. This speech by Jerome Powell has really changed the outlook on the dollar. Complete turnaround from what looked to be a sort of a rolling over of the dollar has now spiked it higher. It's now through the resistance at 90 spot 57 on the dollar index to a 6-week high. On the dollar index, it is sort of back towards levels of obviously mid-January now. 91 is a key level to watch out for now, but it is sort of reflective of the recovery that we've seen with euro dollar breaking below 122 figure. You've also seen cable breaking below 137.65 today, key levels being broken to the downside, and this market is becoming increasingly risk off actually with the outlook of Jerome Powell concerned about inflation and the fact that inflation may drive sort of further the inflation increase in the US may drive the Fed to change its dot plots, and the market is sort of factoring in 3 rate hikes now this year, maybe even 4, but driven by inflation really, and that's never really great and certainly not good for risk appetite. Equity market selling sharply lower. You can see that in the S&P 500 in the last couple of days, sharply down on that, move below 2,698 would be a key breakdown on that market there. So you're seeing equities under pressure and the dollar stronger. But interestingly, the yen is also an outperformer as well. Yen has sort of been buzzing around 107.30, 107 big figure, now back to 107, 106.80 area. So yeah, you are seeing this move in the markets, and you've got further comments by Powell today, and you've also got the PCE, the core personal consumption expenditure for the US as well. That's the Fed preferred inflation gauge. That's this afternoon, and that could have an impact on the market as well. So 2 big factors today to watch out for. Markets are relatively sort of stable at the moment, waiting for Jerome Powell. But this morning you've got the PMIs. Eurozone PMI was actually upgraded very slightly, upwardly revised to 58.6 from 58.5. You got the UK data in a bit. UK, where is it? UK PMI. There it is, 55.0 from 55.3, and that's there in a few minutes. And then this afternoon, sort of aside from the PCE, which is expected to stay at 1.5%, you've got the ISM manufacturing for the US. ISM manufacturing at 3 o'clock, which is expected to be slightly revised, slightly slipped back to 58.7, but still a very strong number there for the US. But my chart today is the Aussie yen. Now, Aussie yen has it's been a key market actually, because I mean the yen has been strengthening in the past sort of month 6 to 6 weeks, and that is a key factor I think in changing the outlook on Aussie yen. It's broken this big long uptrend. It's a big uptrend that's been in place for sort of 18 months really, but broken that with the yen strength. We're also back decisively below 84.40 and sort of falling away. It looks like 81.50 now is likely to be tested, which is the April to June lows from last year. And that downtrend channel is progressing, and broke down yesterday below the near-term support at 83.30. Decisively below that, and continues to the downside. Momentum indicators very negatively configured, all suggests selling into strength, and you've got the hourly chart, which again sort of points towards that little rally this morning, failing at 82.70, rolling over. 83.30 is your key resistance near term as your overhead supply. Yeah, I think anything that unwinds the RSI back towards sort of 40 area, maybe 50 on the hourly, is a chance to sell on Aussie yen, because I think there is further downside going to be seen. 82.30 initially supportive, but 81.50 is your next real support, and that is, I think, going to be tested. So with that in mind, I wish you good luck in your trading today, and I will speak to you later.